Good afternoon, and thank you for taking the time to view this presentation about the PESTLE analysis for Bank of America by myself, Spencer Crume, during my time here at Full Sail University. The focus of today's presentation is to give a little bit of a background on Bank of America. We're going to define the PESTLE analysis process itself. We're going to implement that analysis method, and then we're going to give a quick conclusion of what we found. So first off, Bank of America is a bank here in the United States that has roots dating back 240 years. Now those were not all years as what is known now as Bank of America. It is a growth that has happened through mergers and client acquisition over the years as the bank attached itself to new markets and new regions through acquiring smaller, more regional banks. There's also quite a bit of historical interaction that's happened through Bank of America's history, including helping to rebuild the nation's capital after the War of 1812, financing Hollywood through the Great Depression, and then the creation of the modern credit card, which started out as the Bank AmeriCard and later became known as what we see today as Visa. And now they are currently the front runner in digital banking services and one of the largest banks, both with assets under management and the sheer number of households they serve. The PESTLE analysis itself is a data analysis method that is used to apply marketing principles to help track the environment that the company is either operating in or is looking to expand into. So it's a great way to look at many different aspects of kind of the world and the market, including the 5 components that it consists of: political, economic, sociological, technological, legal, and environmental. The first, under political, is a political action committee. Now, Bank of America has a political action committee that is established for employees so they can interact and directly contribute to the political process. What's interesting, though, is Bank of America provides access to this committee, but does not actually provide the funding. All funding comes from employees and their wishes. One of the potential benefits and also concerns is that it can help employees affect change, but that change may in turn benefit the organization. So they do have to be very careful as an organization to ensure that there is not an apparent conflict of interest there. The impact of this is rated a 3 out of 10, and it's considered a short to long-term impact, with the short-term effects being in smaller election year impacts, and then the long-term, of course, being as the direction of the country changes as a whole, and the way that those can be further impact the business. The second political is tax policies. Now these tax policies are set up to make Bank of America compliant within the taxing world. Now that does make them subject to federal and state taxes in over 100 U.S. and non-U.S. jurisdictions. That is because Bank of America, while it is a bank based in the United States, it is considered to be a global financial institution. The changes to these different tax policies can impact both employees and clients alike. It's something that the bank has to keep in mind when it sets up its different reporting policies to ensure that both clients and employees are able to stay compliant on their taxes as well. It can also affect the operations in different parts of the world, seeing how they are a global financial institution, and the way that their taxing laws in different jurisdictions could potentially affect them both back here at the United States and in those other countries. This is considered to be a long-term impact, seeing how its taxes are not anything that's going to be going anywhere soon. We consider it a 6 out of 10 just due to the fact that with proper planning, it can help decrease the amount of impact on the business, but will always be something that is very prevalent in the needs of the business for planning purposes. The last one is regulatory legislation. The difficulty with regulatory legislation is that the rules are changing constantly, and those regulatory rules increase the risk of non-compliance. It does require the Compliance Department of Bank of America to stay on top of those changes and ensure that employees and corporate market officers know them as well. the sheer size of the institution increases the exposure. It increases the number of people that are potentially interacting with these different clients and regulatory issues that come up, and therefore it makes it to where they really have to ensure that they are looking out for the company's best interest while minimizing exposure as much as possible. These regulatory laws are created through political channels, which does create a potential conflict, seeing how the different influences that happen through the normal course of business could fall back to financial ties or contributions to political organizations or political entities that then could potentially affect the regulatory laws that then either positively or negatively impact Bank of America as a business. So for that, this is looked at a high impact of 9 out of 10 with a mid to long-term impact schedule. On to economics. The unemployment is a big factor, seeing how both employees and clients can be affected by this. This year we're seeing an unprecedented change in the world with the global pandemic, which forced us to see unemployment rise as high as 14%, which has then turned around and dropped back down to 7.9%, which is still historically high in the recent time period, seeing how we had been at record low numbers just prior to the start of this year. Bank of America has a unique position in the fact that they are the administrators of the unemployment debit cards in many states. This creates an issue because that's not really a revenue generating feature. I mean, there is some revenue that's generated off it through transactions and the contract itself. However, the amount of servicing that is necessary for these debit cards requires a large staff commitment. So therefore, it ends up being a difficult thing, but does give them a unique position to try to help more people and in turn potentially grow the number of depositors they have. Unemployment can also have an impact on both employee family members because of the increased pressure on employee finances. So if an employee isn't directly impacted, but they have a family member who is unemployed due to the pandemic right now, it could force them to rely more heavily on the employee assistance programs that are offered by Bank of America. So for that, this is looked at as short to long term, depending on how long these these effects are in place, and an impact of 8 out of 10 because it's definitely a very high impact scenario that that is something that constantly has to be watched and planned for. The second economic one is the currency exchange. Currency exchange is the process by which currencies are exchanged between different nations and different currency values. Fluctuations in the currency exchange rates can affect the value of the dollar and in turn affect the value of the investments and assets that Bank of America has on the global stage. Bank of America does provide currency exchange services, and there's a fee for that, which is a revenue producing service. The demand for that service changes with market value. So as different currencies fluctuate in relative to each other, that can change how much of that service is necessary. And of course, the pandemic restrictions on travel have severely impacted the currency exchange business, as there's just not the need for the travel-based use. However, there is still some business there, as family members will try to either send or receive money from family members across the world. So for that reason, we look at this as a short to mid-term because those fluctuations happen sometimes within the same day, with an impact of 5 out of 10 because it goes both directions. Both the fluctuations go both in the favor of the United States and against the favor of the United States. The last economy version is going to be the gross domestic product, the U.S. economy itself. And we see that impacted by the decline of 31.4% in the gross domestic product figures that were due to the pandemic shutdown impacts. So because so much of the country was shut down, the U.S. economy's growth declined after being in some pretty good territory for growth over the years. Personal spending also increased by 1%, which is presumably due to the increases in the cost of goods. due to the pandemic shortages. So as, of course, supply and demand happens, supply goes down, demand goes up, therefore costs go up as well, and therefore that increases the amount of spending necessary by individuals on maybe goods and services that they wouldn't normally spend money on. And then, of course, the import of goods outweighed the export, which resulted in an increase in the trade deficit in July of 2020 of this year. On the surface, these things may not seem like they would be, big impacts on an individual company. However, with Bank of America being both a global financial institution and also, having a standing on the world stage with all their employees and business entities, obviously the impact is pretty high. We call it an impact 8 out of 10. This is a long term because these types of issues do not right themselves overnight. It does take time to solve them. Moving on to sociological, looking at lending equality, the current focus in the U.S. is surrounding the equality of opportunity between communities, ensuring that the traditionally underserved communities are properly represented and also have the same opportunities for home ownership, vehicle ownership, and different types of debt retirement strategies is very important, and it's a big area of focus right now. So this definitely puts pressure on Bank of America to make sure that they are participating in those programs. But also, Bank of America has a requirement to adhere to the regulations that are designed to ensure fair and equal treatment of all lending applicants. Simply put, anytime someone wants to apply for any kind of lending scenario, they have to be given the same treatment, fairness, and consideration that any other applicant would be, regardless of their creditworthiness. Now, that doesn't mean that everyone's going to get approved, but it does mean that everybody has the exact same criteria to follow. What this essentially does, it helps make the lending available to all communities, ensuring that both communities that are highly affluent and those that are typically underserved have the same equal access, although, again, approval is not necessarily guaranteed. There is, of course, now an increased visibility surrounding the impact of small business lending because of the coronavirus pandemic. Something that Bank of America has looked at is the way that minority-owned businesses in particular have been directly impacted by this pandemic, and is working to ensure that those businesses have the access to the rebuilding and payroll protection loans that larger corporations or corporations in more affluent areas would have access to. This is something that's clearly going to be a long-term impact. Business needs and lending needs are typically long-term relationships, and therefore we see it as a 7 out of 10 as far as how it's going to impact the business over the coming years. The next in the sociological is company culture. Bank of America has a company culture that's focused on the impact that each employee can have on every client interaction. They say that they want to make financial lives better through the power of every connection. And so, simply put, what it comes down to is creating a climate of diversity and inclusion to ensure that employees feel welcomed for who they are. This in turn allows them to have that positive impact on the clients as well, because they, if the employees are accepted for who they are, then the employees feel more compelled to accept the clients for who they are, and then therefore that helps to make positive change within our communities. There's also an internal network of inclusive support groups for both individuals and allies of said groups. What this comes down to is the fact that Bank of America has made a big commitment when it comes to the diversity and inclusion aspects of its hiring practices and of its staff as a whole. And they want to make sure that there are ways for different groups to be supported, not just by members of those groups, but also people who would be considered allies of those groups, because they look to support those groups even though they may not be a part of it. This is a short to a long-term impact because some of these changes and initiatives happened fairly frequently, but then other ones span several years. And of course, the happiness and the comfort level of your employees is something that has a high impact on the way the business is run. So therefore, we call it an 8 out of 10 in this instance. The last sociological happens to do with demographics. Bank of America from day one has really functioned as an entity focused on being available to all people equally. Wanted to make sure that there is a continuation of in-person options for established clients and clients who prefer that more personal banking relationship. But this, of course, increases the need for staffing up financial centers as more and more of the banking world becomes digital and and less personal. Bank of America takes a high-tech, high-touch approach to it, which ensures that they are doing their best to not alienate different groups of clients who still need that in-person interaction. They make products and services to meet the needs of all clients throughout all stages of their life, not only because of regulatory reasons, but also because they see the value in helping clients through each stage as they come across it in life. This, of course, has caused an increased demand for digital banking services, but that increased demand has created a feeling of alienation within the elderly banking community, and that is something Bank of America has tried to stave off as much as possible by keeping financial centers staffed for in-person interactions. We see this as a midterm impact because as the society as a whole becomes more comfortable with those different digital initiatives, then we should see the impact on the demographics that don't take advantage of that lessening. So that way we consider this a 5 out. Moving on to technology, there's a lot of competition in the financial technology or the fintech space, and that's because innovation is expensive and time consuming. It has required a bank that would traditionally have employed people that were focused solely on financial markets and had to expand that to include those who are focused on technology and the ability to create applications and so on and so forth. But what that's done is that has actually created a huge opportunity that Bank of America has can take advantage of, and that is globally the unbanked people were exceeding 60% in some parts of the world. Now those are parts of the world that Bank of America doesn't have a footprint, doesn't have a presence, and so therefore if they were to look into the benefits of expanding into those areas and dealing with whatever regulations are required, then that would help to lower those unbanked numbers, but also expand the Bank of America family. And of course, mobile phone adoption has provided access for clients without the need for a traditional computer or knowledge of using one. This is huge in the fact that most people nowadays have some kind of mobile device. Those mobile devices now can become their full banking interaction center, as opposed to having to go back and sit at a computer and with the knowledge of using a computer just not being something that everyone has. So we do see this as a long-term impact, as this space is going to continue to be crowded, and therefore as other companies innovate, Bank of America will have to innovate as well. So the impact is 9 out of 10. Moving on to digital banking, Bank of America has increased opportunities to create and receive money transfers through Zelle, which is the conglomerate financial transfer app that many different financial institutions use. Also, the introduction of digital assistants, trying to help make it easier for people to do the things they need to for their banking services without having to know necessarily the specifics of what they need to do. Bank of America has an AI-controlled app called Erica, which is built into its mobile banking app, which allows someone to say switch to paperless statements by simply saying, hey Erica, I want to receive paperless statements, or I want to stop getting paper statements. So any number of phrases can be spoken to it, and the artificial intelligence built into it corresponds that to a need or a function inside the app and takes the client directly to it. Also, with the introduction of virtual wallets to store digital payment cards, it has helped to increase the security and the convenience for folks when either they say lose or misplace a card. They now have the ability to lock that card down so they don't have to worry about fraud, and then use a digital payment card in its place until they receive a new physical card in the mail. This is a long-term impact because, again, technology is only going to increase, and therefore it's an 8 out of 10. Last one, client adoption. Client adoption, Bank of America has 66 million clients and they consume 10 billion interactions each year. Now in this case, 97% of them are digital. Just think about that for a second. If each of these interactions had to be done with an individual and a bank employee, the impact on cost and service levels would be huge. So the ability to give these 66 million clients access to whatever they need in their banking world through digital means has given them the power to do what they need to while still having the ability to see someone face to face if necessary. However, still some communities struggle with the digital adoption, which does create a need for continued in-person support. This is increased in regions of the US where the internet access is harder to obtain. And so what it comes down to is the in-person interactions are still necessary, and therefore Bank of America has to continue realizing that and keep their staffing levels accordingly. However, difficulties in the adoption for certain communities or certain clients can lead to feeling alienated, because if they feel like they are required to switch to digital banking options, they may have to change their habits, which may make them feel like maybe the bank is not listening to them or focusing on them. So something that Bank of America must continue to do is ensure that those clients understand that while those banking options are there for them, they still have traditional means to get help as well. We see this as a midterm impact because, again, as society switches more towards the digital adoption and more of that becomes prevalent, this will become less and less of an impact because it will become more and more commonplace. So we rank this as an impact of 6 out of 10. The banking world, of course, has regulatory laws, and those regulatory laws change with both political pressure and then also client protection efforts. So this change in nature does increase the risk of non-compliance through a lack of understanding. So if employees don't fully understand how those regulatory laws have changed, then they could open up the company to risk of potential non-compliance or exposure to other potential regulatory threats without even realizing it. But these regulatory laws do create safeguards for clients, which can lead to limitations on how banks can conduct business. This is most prevalent when we look at the global banking stage, because regulatory laws that may not be in effect in another country but are in effect in the United States are still required to be followed by banks that are within the United States. So they may be hampered in a certain aspect where another international bank wouldn't be. And vice versa, some of those limitations will keep the bank from being able to even conduct business in certain parts of the world. And of course, new regulations increase the need for governance within the organization, and in turn increases development costs, because those new regulations have to be built into the very fabric of the applications that are used both by employees and clients. So we see this as a long-term impact because those regulatory laws are only going to get more and more prevalent, and so we see it as an 8 out of 10. Also labor laws. Anytime you have any kind of a labor force, you're going to be impacted by, in this case here, federal labor laws that impact throughout the entire U.S., state labor laws, which do differ from state to state, but it has increased HR overhead because you have to be able to interpret the laws for everywhere and make sure that you're being compliant for every state that you have employees in. These laws govern safety, wages, fair labor practices, and also discriminatory prohibitions to ensure that people who apply have a fair opportunity to obtain a job, and then once they are there, they're treated fairly, compensated fairly, and so on. So this is clearly a long-term impact, because as long as they have employees, there's going to be a need to follow these labor laws. So therefore, we see this as an impact of 7 out of 10, because once proper policies are put into place, it does make it easier to follow those laws and then watch out for the changes. Privacy regulations and laws. This is kind of a newer part in the space of the legal world when it comes to banking, but the bank does have a duty to protect client privacy and security of information, and it does risk fines and damage to the reputation if they are not maintained and that privacy and security is not followed. We've even seen some changing laws and regulations, both federally and state-based, that govern how data can be used, how clients can be contacted, And that can even impact things as, fraud alerts, the ability to let a client know that they've had potential fraud on their account. But with this increased focus from the banking world, as social media usage increases, more scams are out there. There's the scammers and the criminals are becoming more and more sophisticated in ways to try to hijack the digital tools that are being used. And so it's required both extra vigilance on the side of the banking security, but also on the side of the individual client as well. So we see this as a long-term impact with a 7 out of 10 rating. On to environmental and the last section here, paper use reduction. As more and more clients are cognizant of the impact that businesses have on both the environment and the climate, Bank of America pledged between 2016 to 2020 to do a 30% reduction in paper use, which of course expedited some of the digital adoption necessary, and that does create a need to encourage clients to switch to paperless means. They've also made the commitment to purchase paper from recycled sources, so that way less waste is going into the ground and into the environment, and more recycling is happening to better serve clients and the global community. And then of course, transitioning clients to the online delivery of statements and documents is key to help this this initiative work. However, as we saw in some of the slides before, there is some challenges that come with the adoption of things such as paperless statements or digital banking. We see this as a midterm impact of 6 out of 10. And of course, renewable energy investing, both for the individual clients and as a business, as we see an increased demand for responsible, environmentally conscious investment options, that has required the creation of new portfolio practices and also governance practices to ensure that those investments are being made in the most responsible way possible. And then of course, with state requirements for energy production being more renewable projects, that does potentially increase the costs of some of that energy, as the research and the development and the build out of those infrastructures has to be recouped through the increase of the actual energy costs. And then of course, clients who are looking to fund household renewable energy projects, being able to make sure that proper tools are in place for both mortgages and home equity products to fill the need for clients, and marketing them as such, so clients understand that those are different projects that those fund proceeds can be used for. We see this as a long-term impact of 6 out of 10. And then lastly, green building. So the LEED building standard is there to ensure that energy and environmental efficient building design is utilized. Bank of America's commitment to increase certified square footage by 5% to 25% is in full effect and implementation now, as they look to continue to increase building, continue to increase the green building adoption, but this can increase building and renovation costs as more and more of those materials and supplies are being required in states. And of course, the potential benefit of this is the decreased energy costs and potential tax credits for adopting those green building initiatives. So the hope and the goal would be to see some of those offset through that. We see this as a short-term impact, 6 out of 10 when it comes to the building project costs, because those come and then go. But we see a long-term impact of 0, meaning a positive benefit on the company as a whole because of the green building initiatives, as the increased energy costs and savings perpetuate down the road. So in conclusion, it's clear that Bank of America faces many challenges, but they have addressed many of those challenges through current initiatives and continue to do so on an ongoing basis to ensure that both employees and clients alike are best served. And they are positioned to continue to increase growth and market share in the future due to their increased focus on digital banking and embracing of the technologies and environmental concerns through clean building initiatives. Thank you much for taking the time to listen to my presentation today. Have a great day.